Today's presentation is a bit of a two-for-one, so we're going to look at how to read a 10K, and we're going to do that in the context of a company called Novocure, so NVCR stock we'll be analyzing today as well. Now, we only recently started producing videos, but we've been researching disruptive tech firms for a very long time, somewhere around 2,500 articles, I think, and the latest is one on Novocure, and you'll probably want to read this first. I'll put a link to it in the description of this video because we're then going to build on that. Now, some of you may be asking, what is a 10K? Well, it all starts with the Securities and Exchange Commission. This is a governing body in the United States that's supposed to work in the best interest of investors, but it doesn't do a very good job because we built an entire business around helping people avoid landmines. And one of the ways that you can do that is by looking at what companies tell the SEC. So this is going to be an annual report that all companies are required to file, all publicly traded companies. They're 20Fs for foreign firms, same thing, but called something differently. These are more comprehensive than 10Qs, which are the quarterly reports that firms are also required to file. By the way, when you have companies that delay their filings, that's not a good sign. So you'll see that sometimes. Omitting material information could result in prison time. So executives are incented to cover their asses by providing as much possible information in these filings that perhaps would be things they would never explicitly say to investors. So there are lots of insights that you'll find in these documents that can't be found elsewhere. After thoroughly vetting a 10K, we'll then usually look to see what investor relations has to say. So we always start with a 10K, and today we'll give you an example of how we go beyond that, the sort of next steps after analyzing a 10K. Now, the first thing that you'll want to know is where to find these. Well, you go to the source. So they sometimes will have these posted on the company website, but it's easy enough just to go right to the SEC database. I just do this out of habit. Google SEC online filings, and this result here, filings and forms, you click that, and there you'll find a searchable database. So here you can see the next step, which is to click search for company filings, and then you click search by company or fund name, ticker symbol, etc. So now you're searching the database for all the filings that publicly traded companies make, and there's a lot of them. This gets complex in a hurry. Again, today it's just focusing on the 10K. So we're going to put in the name Novocure. There's only one result for that. We click that result, and then on the next page, we'll want to click View Filings, all right? And then once we've done that, what I like to do is go to the top here of the results and put in that field there, 10-K. What that will do is it will filter all the 10K filings. Now, a couple things to note here. We're interested in the most recent one, so I've highlighted that along the top there. However, they do provide quite a bit of history here, going all the way back to, I think, 2016, and you can see here that what this can be useful for. We like to use it to see what sort of promises things management was saying in the past and what they're saying today. And there are a lot of firms out there that will keep moving the milestone forward and, think that investors won't notice. And it's very easy to pick up on these things when you start going back and looking at history. Don't worry about the 10K/A. These are just amendments. So, you see there in the case of 2017, just click the original, which would be the one on the very bottom, and just avoid the amendments. This is sometimes when they want to revise something. I mean, if you were up for it, I suppose you could do a diff on those and figure out what exactly they amended, and maybe that could tell you something. But it's always a balance, and we said this in the article. What we learned more over the decades that we've been doing this is what not to look at more so than what to look at, because there's a lot of stuff. There's a lot of technical detail, especially in life sciences companies. So here you can see the breakdown of this 10K document. This is somewhere, I think, around 65,000 words. So to put that into perspective, if you read that article we wrote, it's like reading 42 of those. So there's a lot of information in here, and I can only tell you that based on the experience we've had having writers, researchers, analysts over the years doing this work, the only way that you'll get good at this is by doing it over and over and over. Now, We're going to try to just provide some basic information today because every company is going to be unique. I've highlighted some sections that I usually gravitate towards, and in the case of Novocure, we didn't know a single thing about this firm and just sat down and started looking at the 10K. And that's usually the approach that we'll take, though perhaps a cursory look at Yahoo Finance to see the company size and revenue growth just initially, we'd be interested in before deciding we were going to cover a firm. But Novocure was raised by numerous premium subscribers, people that pay our bills, so we decided to cover it. We wanted to know what they do, so in the business section, you'll find that. Then you gloss down through risk factors, and you'll find some interesting bits in there. You've got legal proceedings, management discussion, financial statements. Our approach, of course, is to first understand what they do. So the first sentence of overview under the business section there usually provides the most basic description. Most companies do a great job of succinctly describing what they do, and then below that they'll provide some more detail. And it was easy to figure out what Novocure does. Again, I'm not going to go over what we already produced in that research piece. I'm just going to sort of gloss over that. Once you describe what a firm does, you'll want to start looking for basic red flags. The idea here is that there's thousands of companies out there that have a great story. Just like when you're a hiring manager, you can face thousands of CVs. The way that you filter candidates when you're a hiring manager is by looking for red flags. Everybody comes to the table with some great story. So that's the approach we take for stocks as well. I usually skim down once I understand what they do, down to management discussion. That's a pretty thorough piece of or set of data to read through. And as you're scrolling down to get there, just note useful info along the way. I'll show you an example of one of those items in a second. Risk factors, these are worth skimming. Experience is going to help you distinguish between insights and basic cover your ass stuff. So, they'll say things like, well, the FDA could screw us over. Sure, that's what all life sciences face, a risk they face. But in the case of Novocure, they don't have customer concentration risk, but sometimes that's the sort of thing you'll find in risk factors. They say, one customer makes up 30% of our revenues. Ooh, that's risky, right? You could just read the bolded lines. That's the easiest thing to do. And again, you do this for a long time, and you become quite good at just skimming. Here's an example of some useful info that we came across just going down. I think it was the business overview section. They provide here the number of patients in 3 key markets that are candidates for their treatment based on the rate of disease progression and medical eligibility. So that's their total addressable market with their current device. And also, we noted in that overview, they said US, Germany, and Japan are major markets. Oh, cool. So now we have the total addressable market for 3 major markets. And what's interesting about this is that most firms provide a geographical breakdown of revenues. And if we have that, we can divide that out by the number of patients and figure out what the total addressable market is. So that immediately becomes something to dig into, because if the TAM is weak or saturated, we're not interested in investing. So it's a great job that the company provided this info, and we dug right into that immediately. So if you see a lead on something that you think is interesting, it makes sense to dig right into it. The information that we needed really was in the management discussion section. As I said, this is read most of this section as it contains useful information. We always assume a business has revenues, and if they do, are they growing? For Novocure, they stalled last year along with patient growth, so there's a bit of a concern there. What do gross margins look like? Many people make the mistake of looking at profitability. That's not important. Gross margin that shows you the potential for profitability, because most disruptive tech firms are so busy furiously growing and capturing market share that they can afford to lose a lot of money while doing so, and eventually they just tighten their purse strings a bit and they're profitable. It becomes very easy when you have gross margins like Novocure of close to 80%. Now, in that management discussion section, they give us this table. This allows us to calculate revenues per patient. So then we can take these numbers, divide them out by those previous estimates of the total addressable number of patients, and then we multiply that. We divide this out by regional revenues. Then we multiply that by the aforementioned estimates of total addressable patients. And we've done that here. You see revenue per region. Now, of course, astute readers will note that this says North America, while the estimate they gave was for the United States. But we can assume United States makes up the vast majority of North American revenues. You see here that also happens to be where most their total revenues come from. And then you see Germany and Japan. We divide out the number of patients they're treating in each of these regions. And then we take that number and multiply it by those estimates of total population. And here's the implied TAM. So it's under $2 billion. That's quite small. And at this point, we'd be done with the analysis. We invest in companies that have a lot more potential than that. You say, well, what's the cutoff? Well, it depends on how you look at it, because this firm's realizing, let's say, $500 million a year, okay, and they've got a TAM of $2 billion. That's still a lot of growth ahead of them, right? Well, if they're able to capture all of it, and we're going to talk a little bit more about that. But now, the appeal of this company, we would stop right there and say, all right, we're done. But people who have a little bit more tolerance for risk might want to continue here. And this is also in the 10K, and it shows additional indications, so additional types of cancer they want to treat. So they primarily treat brain cancer, quite deadly, rapid regression, etc. They want to treat other types of cancers, and this is where you'd want to start looking next. And what they provide also, I haven't seen this broken out in such great detail before, is here's their R&D program broken down by that pipeline you just saw. So you can actually see what they're spending money on. And there's analysts out there who do this sort of stuff for a living, and they have this plugged into spreadsheets, and they're doing all these estimates, looking at patient populations and stuff. And if you have the time to do that, that's great. I mean, all the information is here. So this is rather interesting, because it shows where all the R&D money is going to fuel the growth for tomorrow based on these additional indications. Now, what you won't find in the 10K, basic information that you want to get at some point, just pop open Yahoo Finance. It's simple to use. Note the market cap. This is a $3.3 billion company. You can also then quickly look up debt and cash using they sort of standardize financials. It makes it easier than looking in the 10K. You can also look at share price performance very quickly. And what we're looking for is something like this, where we see this company has been excessively hyped over the years. And now it seems to be hitting, well, this is a 5-year chart. You need to take that out to max. I think they've been publicly traded for longer than 5 years. But you can see that the share price is quite depressed, and that it had a lot of hype surrounding it. So that's interesting to note. And then on the right here, you can just see the basic profile of their revenue and earnings, where revenue is sort of tailed off there, and they're starting to blow more money. Though you need to pay attention to operating cash flows, not profits. We'll talk about that in a second. Our take here is that revenue growth has stalled, with patient growth flatlining across all geographies as well, I think except for Japan. This is an expensive treatment. That information is in our article. I think in the States it's upwards of $100,000. I can't recall, but it's very expensive. Our question here, has that price point created a ceiling for the current indication? So, they say, all right, well, there's all these patients we can treat. Well, how many are you able to treat at that price point? So, perhaps there's a ceiling there that, hasn't been considered. Management's heavy focus on what's coming seems to indicate this. And what we did is we cracked open, because we were curious to see what the management team would have to say about this stalled growth, cracked open the recent earnings call, and boy, do they focus heavily on other indications. The current indication doesn't have a very big TAM, and they acknowledge that. But we don't invest in promises of future growth. So there's certainly things to like here. A company that successfully deployed a medical device for one indication, getting all the way up to $500 million in revenues on close to 80% gross margins. Though watch that gross margin over time. It seems to be getting a little bit eroded according to the latest earnings call. But interested investors now need to step outside the 10K, which is what we did, and look at what management is telegraphing. So in their latest earnings call, all this focus on new indications they're working towards is very telling. And I just took some points here. They say, we are in a period of transformation as we eye the opportunity to treat patients in indications that are multiple times the size of GBM. So they're sort of acknowledging that TAM isn't all that large. They're investing strategically to optimize their launch potential to meet upcoming opportunities. In other words, spending lots of money. All these investments, they say, are supported by our sustainable and strengthening commercial business, they say. Of course, as company management teams do, they're spinning that stall as a positive, that now it's, they're resuming growth and whatnot. And indeed, they're correct. They're not burning a lot of cash when it comes to operating cash flows. And so they're able to, with this first success story, fund, hopefully, future success stories. They say, over the next 18 months, we will have data readouts from 3 more phase 3 trials. And of course, that's going to bring with it lots of volatility. Now, this was taken from the investor deck, which we cracked after looking at the latest earnings transcript, because we figured they'd be telling this story, and indeed they're telling it very well. Love this slide. They show their current indication there on the left. The size of that, you see $500 million annual net revenue 2022, 14 times current market opportunity. And then you see to the right, and if we assume more or less the same sort of success story for these other indications, then it's a $7 billion market opportunity. Again, just not that large based on the sorts of TAMs that we look at across, large SaaS companies that are certainly a lot less risky, have a lot less external regulatory risk that you can't control, and you need to spend a lot of money to get these therapies to market. And you can see here another great slide. So their investor deck's worth a look. It's put together pretty well. Lunars seems to be talked about a lot, so they seem to have gone the furthest with that potential indication of lung cancer there. You can see the others here on the right, and along the bottom, pay attention to this. So this would be operating cash flows. You can see how over the trailing 12 months, they're positive. And if you look at an annual basis, they're positive as well, but they're starting to get some negatives there. So just pay attention to that. That will reflect the cash burn. I think they have somewhere around $950 million in cash, $567 million in debt. So you can net that out. Let's say $450 million in net cash. They can last quite a while burning through some of that. So, just going back to this idea of analyzing a 10K, each company is unique, and we use the Novocure example, and maybe at some point we'll sit down with paying subscribers and actually go through a 10K fresh for a company we've never looked at and just sort of show how we do that. Our first goal, of course, is to figure out what the company says they do and how they really make their money. You'll find that in revenue segmentations, and we didn't touch on that in the article or in this piece, because once we hit our showstopper, we stopped analyzing the firm. And I'm not sure if they provide a breakdown. The next thing you'd want to look for is device sales versus consumables. But what they do tell us is that this is offered on a monthly basis for patients, so they may not even have that breakdown. But again, every company is going to be unique. We're always looking for red flags. We're always looking for a reason to stop researching a company and move on to the next one. So this can be a very exhaustive process. It's 64,000 words, which is about 42 Nanalyze articles. It's why most retail investors don't go to this level of detail, or they pay us to. The information, though, is quite accessible. The exception might be some fintech firms that get very complicated in a hurry. So the next time you start analyzing a stock that you've come across that looks interesting, start with a 10K. Take notes along the way and see how that works out for you. So just to conclude for Novocure, a medical device that treats one form of cancer and has seen success across the globe with that is certainly appealing, even if growth has stalled, because it shows they're capable of repeating that. And of course, the new diagnoses won't be going anywhere, so that's some nice juicy revenues that they can get a healthy gross margin from. That current indication has limited TAM, and we're questioning if their price points are preventing total saturation of the target populations they describe. Revenue and patient growth have stalled, and management placing heavy focus on coming indications means that that's really the story here. We don't invest in stories. They're not overvalued at all with a reasonable, simple valuation ratio. Love, like, or avoid. So we wouldn't own this, particularly because we're overweight life sciences already. We find this sector to be very risky. We don't invest in promises of future growth, and We don't really have an open slot that we're looking to fill. Would we like it or avoid it? I think at the conclusion of that article that we published, it would be an avoid. But I think when you look at their, let's say, their history of being able to market this product already and generate a lot of revenues from it, and the fact that they think, or they're investing a lot of money and believe that they'll be able to capture other indications in the same way, there's something to like about that, though we don't invest in promises of future growth. But we can certainly see the bullish appeal to this stock. So I'm going to put up another video here that you might want to watch. Before you click that video, please click the Analyze logo on the right. Support our channel. Thanks for taking the time to watch this today.